Hello and welcome. You're watching Your Trades with me, Mansi Dave and Kavita Thaplial. Yet another start of a week and a week one, as we did see Nifty did close below 24,700 levels. Both the benchmarks as well as the broader markets did tank down in trades. So yet another session, Kavita, of downtrends.
Absolutely. It's a choppy Monday, and as far as the market is concerned, closing almost to the day lows level. And although there was some sentiment booster in between, and the market was trying to recover, but that did not happen definitely. So, in fact, it's a very poor start of the week today. Looking at the advanced decline numbers, also we can see 2112 declines and 696 advances. A lot of result or earnings season impact on the stocks as well. If we can look at Kotak Mahindra Bank closed more than 7% down. Bajaj Finance, Wipro, again closing up to 2.5% down. IndusInd, Bharti Airtel, Titan again 2.5 to 2% down. So a lot of earning earning news that was dominated in the market. As far as the gainers are concerned, the ones that closed as being toppers of the Nifty, Shriram Finance almost close to 3% up. Cipla, Hero Moto, HUL we saw in the range of 2.5 to 1.5% up. SBI Life, Asian Paints, ICICI Bank were the ones again closing in the green. So on the sectoral front, reality stocks remain totally under pressure, weighed down specifically by losses in Lodha, Prestige and Oberoi. Private banks also saw a selling session today, which was definitely led by Kotak Mahindra Bank. But in contrast, as we all witnessed, Pharma was in news that the counters also traded very high. Laurus Labs, Cipla leading the gains. And meanwhile, if we talk about the broader market, they were slightly lower. Small caps and mid caps both were not supporting the major indices. TCS share slipped nearly 2% after company announces over 12,000 layoffs, and that was one of the stock in the IT pack which was also in news. We looked at CDSL share almost drop 4%, after Q1 profit falls 24% on YOY basis to rupees 102 crores. Lodha definitely closed by almost 6% down after reporting Q1 results. So today's market or today's day, Mansi, we can say was dominated by the earnings season, and obviously during the weekend there was some negative news flow that also impacted. But overall, a very choppy start of the week.
Absolutely, the bears were completely taking charge of the market, and news that did make headlines during the session. Largely, Kavita did touch base a few. The TCS to start with, it cut down 12,000 jobs globally. Any which ways, the IT sector not doing really good after the numbers also, and yet another news flow coming in which did dent the sentiments, particularly for IT and in particular again for TCS as well. But apart from that, real estate, yes. Kotak Bank, yes. Loss Laboratories was another stock which was in focus, and at least one which was showing signs of good positivity because the land allotment in Andhra Pradesh was a news flow which helped Loss Laboratories. And then we also had a few brokerage bullish reports, 5.5-6% gains we did see during the session today. And again, Asian ones, quarter one, weak demand on two, which was denting the profit levels, and the impact on Asian Paints. And of course, oil marketing counters on the back of crude oil prices. Constantly, the oil marketing, oil refining, as well as the crude oil connected sectors were the ones which were doing the rounds, which were in focus. But all in all, a negative day for the market. We have Lakshmikant Shukla, technical analyst, Institutional Research, Yes Securities India, joining with us. Lakshmikant, good afternoon. Thank you for giving your time to it. Now, below 24,700 levels, we did witness both benchmarks, be it Nifty, Bank Nifty or the broader markets, were showing signs of red. What's your view on the technical front for the indices?
Good afternoon to both of you. And first of all, I would like to say that thank you so much for calling me on your show. So, talking about Nifty, as Nifty failed to find respite even on the first trading day of this expiry week, falling by around 0.6%. After forming a bearish candle in the previous week, index has decisively broken below the 23.6 Fibonacci retracement level, which is measured from the April low to the record high in September, and also slipped under the 50-day SMA, so which is showing further weakness. All technical indicators, including momentum and moving averages, suggest that bears remain firmly in control of the market, and we predict that Nifty could extend its downward move toward the levels of 24,470, which is the low of the which was the low of the green candle of June 13, and that is also coincide with the 20-week simple moving averages. Now we see further support of the Nifty toward the levels of 24,470 to 24,500 levels. In case if we see any kind of bounce back due to short covering, so Nifty could find resistance near the levels of 24,900 followed by 25,050 where its 50 DMA is seen. So overall structure looks on the bearish side, and even if we look at the structure of Bank Nifty, which has also displayed a bearish candlestick pattern on the daily chart, that is also where we have seen bearish crossover in RSI also. So even Bank Nifty is showing weakness. Now cautious stance is recommended for the near term for the Bank Nifty, as we anticipate that a trend for Bank Nifty may shift to sideways to bearish, and immediate support is seen near the levels of 56,000. If it breaks this level, then 55,500 would be the next support, and on the upside resistance is seen near the levels of ranging from the zone of 56,600 to 57,000. Apart from this, India VIX also surged by 7%, reaching toward the levels of 12. So this significant rise indicate a growing sense of nervousness and apprehension about the market.
All right. So, any specific picks in terms of buying strategy or selling strategy with specific targets that you might want to recommend?
So looking at the circumstances of the market, so I would like to recommend one buy call and one short call. So first one is Zydus Life. So I would like to give buy recommendation in this stock, as this stock has given falling channel breakout on the daily chart, and although it has seen some minor profit booking, but the sequence of higher tops and higher bottom is remain intact in the stock. So we could see further upside move in this stock in the upcoming sessions. Our target is around 1030, and in case of any dip, I think 954 could act as the strong support for this stock. And second stock which I would like to recommend sell, that is Gale India. So this stock has given descending triangle breakdown on the daily chart and started moving below all its key moving averages with the formation of lower tops and lower bottom. And yesterday it had also breached its previous month swing low. So overall sentiment is looking bearish in the Gale India future. So we would like to give sell recommendation in this stock for the downside target of 170, and one can keep the stop loss of 185 if any rebound occur in this stock.
So one call on the buy side for in the pharma space and one on the sell side. Lakshmikant, thank you so much for joining with us and helping us through the markets technical view, both index wise as well as stock specific. Thank you so much. Have a nice day to you. Let's move ahead, go across to Shrishti and understand the technical charts. And Shrishti, I suppose today we have both the breakout as well as the breakdown charts looking at the market and the texture, which we did see during the entire session.
Well, indeed, we have got two counters for our viewers, one on the breakout and the other one on the breakdown side. Firstly, let's have a look at the breakout stock, and that's Dabur India on the charts. Because in this market as well, the stock was holding gains of more than 2% right now. And what we have seen an interesting setup on the technical front, because for today, you will see that on the technical pattern, the stock managed to make a bullish engulfing candle for itself. It was a strong green candle all throughout the day. The stock managed to hold that position in the green, and about exactly from its 20-day moving average is what we have seen, and hence we have chosen this counter as a breakout stock. We're moving on to next counter then, and that's a breakdown stock. The realty pack is having real pressures, if we can call it that, because DLF was once a stock within the whole sector where we have seen more than 4% of a cut in today's trading session. And what was interesting to see is that in today's trading session, the stock managed to break below its 880 odd levels of close to rather those levels of support in today's trading session. Now it's trading way below its 20-day moving average, and multiple times it has faced rejection around that 900 odd levels, and hence a breakout on the charts as well. So these are the two counters for today. Back to you.
All right, thank you so much, Srishti. But then what's the word coming up from the wise? India is in a good position to tackle global volatility, says Ashish Chauhan, MD CEO of National Stock Exchange. He believes the Indian capital market can double in 5 to 7 years.
look at the long-term signals, right? And that's what I started with saying, look at the technology growth, the demographics, the demand, the ability to create ecosystems, to create growth, and of course, an ability to sort of negotiate on real time. That is what democracy is all about, right? Many groups which feel left out, they want their pound of flesh, they have to be given, and so on and so forth. So it's a fascinating sort of things going forward, that India is pretty much looking like a shining beacon. Not only sitting where I sit, but India has a glorious future, and that will be on the back of services, that will be back of now manufacturing, but back of its young population, its non-violent population, its technological oriented society.
So that's the exclusive with Ashish Chauhan, where he was helping us navigate through all the fundamentals and giving us the Guru Mantra, the golden advices on long-term perspective for the market. Moving ahead and talking about the quarterly numbers, and after the IT majors, all eyes were on banks and financials. However, over the weekend, we had the banks and financial major numbers, which were not that great. Weak quarter one for Kotak Bank, as profit almost halves, while provisions more than double. Margins also miss estimate, while asset quality worsens. Varun Dubey joins to tell us what brokerages are penciling in. Varun, over to you.
So it has been a weak quarter for Kotak Mahindra Bank, wherein the overall NII growth has just been around 6%. We were expecting it to be around 7%. And also the profit degrowth has been around 47.5%. We were expecting the profit to come at around 3,500. The overall profitability of the company, that has come at around 3,282 crores. Also, the provisioning has gone up for the company by around 2 times on a year-on-year basis, and slippages have also gone up for the company by around 33% on a YY basis. And if you look overall, asset quality has deteriorated more than what we were expecting, and also the net interest margin decline has been 32 basis points, which was higher than what we were expecting. The company has said that there was pressure in the overall MFI and retail CV space, because of which the overall credit cost of the company has also gone up, although they are seeing a peak in the overall MFI business. There are brokerage houses like Nuvama and Motilal Oswal who have actually gone ahead and cut the price target on this bank. Now, Nuvama has a hold call with a price target of 2020. They have cut from 2350 to 2020. They say that the overall NIM and credit cost is a big disappointment, and there is a sharp fall in NIMs. Also, the fee income for the bank has slowed, and they are cutting their overall EPS estimate by 7 to 8% for FY26 and FY27. Also, Motilal has a buy call, but they have cut their price target from 2,500 to 2,400. They say that the asset quality stress overall dents the margin for the company, the earnings for the company, and they have also cut their earnings estimate by 3.5 to 1.4% for FY26 and FY27. So it's been a weak quarter, it's been a missed quarter for Kotak Bank, and there are several brokerage houses who have gone ahead and cut their earnings estimate and also price target on Kotak Mahindra Bank.
Right, mixed brokerage views on Kotak Mahindra Bank. But then on the flip side, Shriram Finance upbeat after an optimistic outlook on future growth. MD and CEO says they don't see much pressure in the MSME segment, with good growth priced in for CVs. Listen in.
On the MSME side, see, majority of our portfolio, we have do not have much of an exposure to manufacturing, but a majority of it is towards services and trading. So there is not much. We've not seen much of a stress in these two segments. It's actually the new CV segment picking up. Because see, we are predominantly a used CV player. Fundamentally, we were not able to. Honestly, the liquidity is one issue. Definitely, excess liquidity has played a negative impact. Quarter was primarily because of the staff costs going up, our increments adding to the expenses, and some infrastructure expenses where we have we had to spend some money on upgrading the infrastructure in branches for gold loans. So I think it should become normal. We should bring which is at 29.29 now. It should come down to about 29 next quarter, and then next 2 quarters we should bring it down.
Let's move ahead and go across to Rabinder and understand all the stocks and news that were doing the rounds on the exchanges during the session. Rabinder, over to you.
Live is in focus in today's trading session where Andhra Pradesh government has allotted 532 acres of land to set up a pharma units with a planned investment of rupees 5,630 crores. So back of this, Laurus Lab is in focus. Moving to next, SBI card and payment system is also in focus where company has announced Q1 number and company reported a weak Q1 number, and after that company reported a net profit as 556 crore as compared to 594 crore, which was down by more than 6% year on year basis. And brokerages has also downgraded the stock. Morgan Stanley has downgraded the stock to underweight from equal weight rating and cut target price rupees 710 as compared to earlier target price rupees 775. Apart from this, emphasis is also in focus on the back of their brokerages upgrade, where Morgan Stanley has upgraded the stock to overweight from equal weight rating and high target price rupees 3,500 as compared to earlier target price rupees 2,650. And Jeffries has also upgraded the stock to buy from hold rating and high target price to rupees 3,100. And lastly, Cipla is also in focus on back of the brokerage note, where Nomura has maintained their buy rating and high target price rupees 1810 as compared to earlier target price rupees 1780. And Kotak Institutional Equities has also come out with the note and they have maintained their buy rating and high target price rupees 1850 as compared to earlier target price rupees 1800.
All right, thank you so much, Ravindra. And let's move on. Sudhanshu Jain, Chief Financial Officer at IDFC First Bank, sees some pressure on NIMS in the next quarter. He also expects the NIMS to rebound to 5.8% by Q4. Listen.
We could see some pressure in NIM in Q2 because of the June repo transmission, which is yet to happen. But at the same time, viewers should note that we have reduced our FD rates drastically. That used to be about 7.9% in Q4. That has come down to now 6.75. FD being a slightly longer term product, that benefit will come out in 3 to 4 quarters. So we expect NIMs to rebound upwards of 5.8% in by Q4 as some of these things play out.
So that was IDFC First Bank Management talking to ET Now post the quarterly numbers. Moving ahead, R. Mukundan, Managing Director and CEO Tata Chemicals, said that easing of pain in Europe aided Q1 performance. He also added that Q2 may be softer. Listen in.
Overall business itself, I think, has been a good turnaround from Q4. We said that the pain in Europe is going to end, and a lot of the actions we took last year have borne fruit. In addition to that, we had said that the capacity expansion in India will play out this year, which has happened. So actually the big shift, as I said, one third. One third of the benefit would come from the capacity in India, which has come on stream. One third will come out of the restructuring we did in UK, and one third would come out of the cost out which we were doing. Now, this quarter also had lots of one-offs, about 100 odd crores. So I think we should discount that below EBITDA, which was mostly due to tax refunds. I think those refunds, we are somewhere in the pipeline. What this year is going to be getting back to a normal. Last year was a year full of challenges and pain because we are taking restructuring in Europe, and also the capacities were coming on stream, and it was a bit of a wobbly year. In terms of how the year will play out, I think clearly Q1 and Q2, between Q1 and Q2, the Q2 tends to be slightly lesser than Q1, but then again it picks up during the winter months. That's how the demand pattern is, mainly on account of monsoon in India, wherein both construction and detergent demand comes down. But we do expect it will follow the same pattern.
That was Tata Chemicals, but then let's talk about Asian Paints. The largest paint producer, Asian Paints, is all set to report its Q1 numbers tomorrow, with volume growth in its core decorative paints business is projected to stay in positive territory. But what's the street expecting? Rabindra is connected with us with all the details of the preview. Rabindra.
Well, Asian Paint is set to announce their Q1 FY26 number, and street is estimating a revenue at rupees 8,989 crore, which was flat on year basis. And if we talk about PAT, then street is estimating a PAT rupees at 1101 crore as compared to 1170 crore, which was down by 6% year on year basis. And if we talk about EBITDA margin, then street is estimating a EBITDA margin at 18% as compared to 19% in Q1 FY25. So overall another modest quarter for Asian Paint. If we talk about volume growth, then street is estimating a volume growth at 3.5% to 4% as compared to actual volume growth of 7% in Q1 FY25, and pricing continues to be negative due to an adverse mix and down trading, and analysts are estimating a B2B segment to grow in double digit due to a promising capital outlay, and growth remained muted in Q1 as demand condition has not seen any meaningful improvement, especially in urban markets, and Asian Paint has a high exposure in urban markets. And if we talk about key things to watchable for, first is management commentary on the recent acquisition in the paint industry, commentary on demand outlook and gross margin trends.
Okay, thank you for that update on Asian Paints, Ravinder. And before we close your trades, let's help you through all the important cues, triggers and economic indicative action events that will be in focus for tomorrow. Snehi is here with all the details. Snehi, over to you.
Well, yes, lots of cues to watch out for. Not much happening on the macroeconomic front back home, but globally lots is happening. Let's first take a look at what to expect from Wall Street. From the US market, you have merchandise trade, conference board consumers confidence, job openings, as well as, more importantly, the two-day Fed meeting beginning. So watch out for that. From Eurozone, you have consumers inflation expectations. So watch out for that as well. In terms of global earnings, all eyes are going to be on Barclays, Visa, L'Oreal and AstraZeneca. So across sectors, you have some heavyweights coming out with their numbers. In terms of Q1 earnings, back home, three Nifty companies, namely Asian Paints, L&T, NTPC, will be out with their earnings. But apart from that, a whole host of companies from the broader end of the market like Star Health, V-Guard, Greenply, Deepak Fertilizers, Varun Beverages, Piramal Enterprises, Dilip Bilcon, so many stocks to watch out for. So keep a close eye on all of these stocks as well. In terms of AGMs, Happiest Minds, Borosil, Aadhar Housing Finance and IDFC First Bank will be in focus. And lastly, in terms of some corporate action and board meetings to watch out for the stocks of Piramal Enterprises as well as GMR Airports. Their boards are going to be mulling fundraising, and along with that, it's also going to be names like Alembic Pharma, Punjab and Sindh Bank and SRF that will be trading ex-dividend. So watch out for all of these cues very closely.
Okay, Snehi, thanks for helping with us for all the cues for tomorrow. On that note, we wrap this segment of your trades. It's a goodbye from me, but the news and action is constantly up and running on ET Now. So you stay tuned with us. Thank you.